Hey, it's Soleil, and this is episode 50 of the Red Pill to Orange Pill Investor. And I don't know, am I supposed to do something special for 50? I got like two people that watch anyway, so I don't really think it fucking matters. But yeah, there's nothing really to do. This is low maintenance. This is one of the reasons that I love selling covered calls. It's just so low maintenance. Um, my account was down a little bit down earlier during trading hours, but after hours, MicroStrategy's up, so I guess pretty even. But yeah, I mean, unless there's big movement that I want to take advantage of, I literally don't have to do anything except on Fridays. And it literally, and I don't mean like figuratively, the way most people say literally, it literally takes 30 minutes max to roll calls. I mean, especially on this account, I only have two options to roll. Um, oh, sorry, I got three because I've got the sleeps and a 207.50 cover called against it. So I only have three calls to roll. I mean, that's like, I mean, if you're really in a hurry, you can do it in 5-10 seconds each. So you could you could just trade cover calls on a Friday, close last week, open a new one for next week. You know, do a quick check. Is it going to be earnings next week or something? I mean, it's just so low maintenance. It's ridiculous. Now, I have said before that it's possible that selling covered calls could, if you get lucky with the strikes that you pick, you could get lucky and it be a more advantageous strategy than just buying and holding. However, with something like MicroStrategy, where, I mean, right here, like probably 2 weeks in a row, MicroStrategy exceeded my strike by far, to the point where I had to sell off some other assets to even roll it because I didn't want to give up the shares. And like in my IRA, you can't use margin. So absolutely, I had to transition from not being able to afford MicroStrategy to having to do a MicroStrategy leaps, in order to be able to continue to trade it. And my IRA would actually be worth more if I had just bought MicroStrategy and done nothing. So I'm not a financial advisor. It's not financial advice one way or another, whether you should just buy and hold or sell covered calls. But the reason I sell covered calls is just in case the stock doesn't go up. I mean, it can go from here to here and stay there. I mean, if you're trading some bullshit like fucking GM to the max. Wow. If you bought for 36 in 2010, you'd make 11% in 14 years. That's amazing. So if you're going to own some garbage, some straight fucking garbage, like General Motors, I mean, what is there? Is there amazing, do they have amazing, I can't even think straight. Yeah, they pay a dividend, so 0.93%. I don't know. Is that worth it? Is that worth it to earn 11% over 14 years? This dividend yield better be fucking amazeballs. But the point is, if you're going to trade some shit like this, where, I mean, for the most part, it doesn't look like you really have to worry about the stock surging very often. uh, I can't even imagine that you would get much. This is already Tuesday. So like 1%. I mean, you can get like 1% a week, 0.5% at the money. Not a lot. But even in that scenario, it would be kind of like collecting dividends every week. And if you're going to hold some straight ass stock like GM, I guess you might as well. But so yeah, you're not guaranteed Tesla, and Tesla's not even guaranteed Tesla. Like, when you're here and you go up to here, Tesla feels amazing. But if you buy here and ride it all the way down to here, it feels like a kick in the nuts. So, you're not promised this. The stock market doesn't owe you a damn thing. And even when you get this, you can still get this. Now, granted, I mean, it only went down to 113, which, oddly enough, that's approximately what this. Yeah, this was not going below 100. There had to have been a cajillion dollars in limit purchases at 100 to keep this from going lower. But you never know. What has the saying go? The stock market can be irrational longer than you can remain solvent, or some bullshit like that. The bottom line is, I mean, this could have just gone to $1 and just wrecked everybody. So you're not guaranteed a damn thing. And if you sell covered calls from $20 up to $400, and you don't 20 extra money because a couple of times it goes over your strikes, and maybe you only 10 extra money, but you protected yourself from downside risk, when this shit happens, is that worth it to you? It's worth it to me. Besides, I'd rather get some extra money here, rather than hold this shit for 20 years and then just hope. I know the passive investors tend to succeed more, but I think that's just because people are stupid and they can't handle the emotional roller coaster. They can't handle thinking that they're going to be rich and then not being, and panicking somewhere along the lines. So that's why I take the panic out of the equation. And there's no emotion in it. You don't know what the stock's going to do the next week, so you just select a strike, a reasonable strike. Give you a couple of percent in upside, give you a couple of percent in premium. That's guaranteed. Once you sell it, you've been paid. The other guy cannot just, back out of the deal. So that's your money. You sell a covered call, that money appears in your buying power. Your buying power will increase by that amount. So I don't know if that's a bird in the hand is worth two in the bush type of deal or not, but it's what I do, and that's how I do it. All right, have a good one. Be good.